since 1971, when the U.S. leadership decoupled the dollar from its golden chaperone. The intent to exit the highly inflated, faith-based fiat dollar is clear. Whether the BRICS Plus nations announce this currency this year or not, the real death of the U.S. dollar will be domestic, not foreign. The BRICS currency will merely serve as a finishing move, not a catalyst. In this video, we will hear from Lyn Alden. We will hear from experts such as Jim Rickards.
Who's to blame here? You see a lot of people say just blaming the Fed or just blaming that bank, and it's just kind of a mix of a lot of factors, because the Federal Reserve did create a very difficult operating environment when you have, say, a rapid increase in the amount of broad money supply, very low interest rates, and when asked about the rapid increase in the broad money supply, the Federal Reserve chairman said he didn't really see this being inflationary. Then, of course, it was inflationary. And then they had to pivot their whole monetary policy. They raised rates. They also sucked liquidity back out of the banking system. And so basically, banks are undergoing this gigantic whipsaw.
So I think that they're going to try to raise rates until something breaks. Okay, so in the 70s, they were able to raise rates because debt as a percentage of GDP was low. You could put rates in the double digits, and that interest expense was still relatively small. I mean, it put the economies into a recession, but it didn't put you into a depression. Whereas in the 40s, when you have sovereign debt's 100% debt to GDP, and it's even worse now because you have all this private debt.
So if you look at public debt and private debt in the United States, it's about 370% of GDP. Then that is bullish for more scarce assets in the long term.
I'm pretty bullish on gold. I'm starting to see it confirmed in price. And so, for example, with a declining PMI, basically risk off of environment, gold kind of finally has its chance to kind of decouple from S&P 500 to the upside. So that combination of decelerating economy, and if the Fed indeed is unable to be as hawkish as is currently priced in, that could be a bullish catalyst for gold. And so it's really once the other things start to encounter weakness that people can look around and say, well, what's doing well? And one of them is, I think, in this declining PMI environment, is gold.
The end game of a very, very indebted sovereign country is that they have to do often QE type of activities, even when inflation's above target, just to support the bond market.
If mortgage rates are 10-50%, if treasury debt is 10-50%, everybody's insolvent.
So there's no way out. This is a roach motel. The Fed has literally no exit. In time, though, give it enough time, if they keep printing and keep printing and keep printing, eventually the balance sheet will get to the point where people just lose confidence. And confidence is the real wild card. Confidence can be lost very quickly, very unexpectedly. Once you lose it, you can't get it back. And that is what happened in the 70s. It's what happened to sterling in the 1930s, the panic of 1931. You'll see that these things keep happening, and they're going to happen again. We are doomed to repeat it. We will have financial panics and financial crises, but there is one thing that's different. In the past, whenever these have happened, there's always been someone to take the baton. So in 1914, when England was under stress because of World War I and their financing costs associated with World War I. So England kind of passed the baton to the United States, and we acquired an enormous amount of gold. Back then on the gold standard, when we produced agricultural exports, cotton exports, and so forth, we could get paid in gold. So the U.S. really began its big rise as a gold power right at the beginning of World War I. Now again, throughout the 20s and 30s, sterling and the dollar sort of shared the role of reserve currency. In 1944 with Bretton Woods, the baton was passed once and for all to the United States. That was the Bretton Woods modified gold standard, which lasted 71. Then it was King Dollar through the 80s and 90s. Now, so there's always been someone there to pick up the broken. Somebody falls, but somebody else picks it up and continues the race. Now, the problem today is that in 1998, you had this hedge fund collapse that was as dangerous as what happened in 2008. Wall Street bailed out the hedge fund. Flash forward 10 years. Wall Street was collapsing. It wasn't a hedge fund anymore, it was the banks themselves. The Fed came along and bailed out Wall Street. Okay, but now the Fed's got all the liabilities. Who's going to bail out the Fed? That's what's different. Now, every crisis gets bigger than the one before. A bigger guy comes along and bails them out, but then that's the guy who gets in trouble the next time. So the next time it happens, and it will happen, it's the Fed itself that's going to be in trouble because they've trashed their balance sheet. And who's bigger than the Fed? Well, there's only one answer, which is the IMF, the International Monetary Fund. And they might try to do that. In fact, well, they will try to do it. And if it works, it will save the global economy at the expense of the US dollar. So I agree with that characterization. But it might not work. People might say, wait a second, all these other currencies are going down the tubes, the dollar, the euro, everything else. Why is this any better? This is just replacing one kind of printed money with another kind of printed money. Now, if it works, I think it'll work because no one understands it. So if it works, part of it'll be the mumbo jumbo approach that, trust us, it's all fine, even though no one understands it. But that might not work. People might see through it, in which case you'll probably have to go back to a gold standard, because that's the one thing people do understand. It's the one thing they do trust. So there's not a central bank in the world that wants a gold standard, but they may have to go to a gold standard to restore confidence.
I say, look, even if central banks and the IMF don't want a gold standard, you can go on a personal gold standard. You can personally protect your wealth, personally protect your hard-earned savings by buying some gold, putting it in safe storage for yourself. And I guess I call it you don't have to wait for a central bank gold standard. You can go on a personal gold standard.
How do you hedge against an ever-depreciating fiat dollar? Own the opposite. Sound money. Sound money is built with assets that have scarcity, a long track record of trust and value, and cannot be printed by central banks. Fiat currencies have come and gone, but all the while, gold and precious metals have stood the test of time. Get started protecting your retirement savings today. See the links in the video description to get access to the free gold investment guides from the best gold IRA and gold investment companies that we have personally researched and vetted. Thank you for watching.